Hello, everyone. Hey, what's up, everyone? So, in today's episode, I'm going to be talking about how collectible card games and other kinds of collectibles that we are already trading, or at least communities are trading, could possibly make us rich, and how we can actually digitize them into tokenized forms and put them on the blockchain for further security, validity, and at the same time open up more accessibility to these markets. Now, as someone who was very interested, or at least a collector myself, back in the day, I was someone who I was someone who played Magic the Gathering. Now, obviously, I wasn't fortunate enough to play Magic the Gathering during my heydays, right? During my heydays was in secondary school. I think I was anywhere from 13 to 14 years old. Magic the Gathering first started in 1993 by Wizards of the Coast, and it is a very, very popular game that is played on a tabletop. Right, so obviously, if you are someone who's watching this episode for the very first time, it is still crypto related, but you have to hear me out on how I kind of thought about all these kind of things. And I feel that this will probably be the next leg, because we are very familiar with anything that is digital at the moment, like digital items, virtual items, so on and so forth. But I've always advocated that we need a tangible asset that can back up these tokens, right? So right now in my head, when we look at this space on a whole, there's very little things that are asset backed. Okay, there's nothing tangible behind the tokens other than the company's promise of a return or a promise of more tokens. Okay, the companies that are involved are not using any kind of collateral assets like their property or backing up with gold, silver, any kind of tangible item. Nothing at all. Everything is just virtual. But if we could actually put a tangible asset behind the token, right? That way, it gives it more value, or at least you can at least peg a value to that particular token. So in this episode, I'm going to be talking about collectible cards, right? So what inspired me to create this episode? I think we have all, especially boys, right? We have all come to a stage in our lives that we definitely played some kind of collectible card game or computer games. But in this case, collectible card games were pretty important to me. So I started off playing Magic the Gathering, and at the time it was called 4th edition, where the borders were already white, right? But 4th edition was still pretty much it was also quite valuable. But I actually moved on to Pokemon cards later. So what kind of got me interested was I was just browsing through information across the internet, and I was asking myself, what items would potentially be valuable enough that could potentially be digitized or at least fractionalized that people would want to buy it. So I was just thinking in my head, and then I was thinking to myself, okay, maybe Magic the Gathering cards or Pokemon cards are already at the stage where they are really very valuable, that until now there's still a very strong market for it. So I typed Black Lotus, and obviously this came up. And the Black Lotus, right, the last known transaction was actually $166,000. So there are only 1,100 Black Lotuses in the market or in print. Now this is pretty familiar, right? Because there are only 21 million Bitcoins. But however, Bitcoin is only about maybe 10 years old, whereas the Black Lotus, if you're talking about the Alpha Edition, that is already I think it's like what now is 1993, 2019 minus 1993, you're looking at 20 over years. Yeah, close to, so 17 years. So wait, 1993. Yeah, that's like, well, wait, let me see. Suddenly my math becomes so bad. Wait, let me see. Ish. Okay, so 2019 minus 1993, you're talking about 26 years. Sorry about that. So 26 years for the Black Lotus to actually gain a value of roughly, so the last known transaction was 87,672. Now, the difficult part about the price is that every single Black Lotus is unique because the condition is always different, right? So if the condition is always different, you're going to have different prices, and at the same time, there are Black Lotuses that got damaged through the many years. People don't know how to maintain them, and at the same time, you don't even know how many of them are genuine, and there are quite a number of Black Lotuses that are obviously counterfeit. So you have all these things that you have to contemplate and think about when you're buying something like this. Now, why would anyone buy a card that is worth $87,000? Like, why would you spend that kind of money? Firstly, this is already an established game. It is very, very popular, and collectors really value this particular card, especially because although you can't play it in tournaments or whatever, you can still use it if you're playing the vintage Magic the Gathering game, where it's just for fun. You're not gonna compete on it, or maybe there is a tournament for vintage players. I don't know, but for now, no one would really want to use a Black Lotus in the deck, right? Because it's just so valuable. You don't want to destroy it. If you have it, you probably want to keep it, and it only will appreciate in value over time. This is a given. Now, what kind of attracted me to look at this again was the price. Okay, so we go to PWCC, which is a pretty popular marketplace for the Black Lotus, right? Or at least, for any kind of cards or collectible cards. So right now there's an auction place only. There's no live marketplace. So if you look at it, right, the last transacted price, as in the last transact. Okay, so like you said, there's as you can see, there's no real firm price. Okay, every single Black Lotus. If you look at, let's say, if you type Black Lotus Alpha, okay, if you type Black Lotus Alpha, you will have this whole list of the transacted prices previously. These are basically price discovery. So I'm still figuring out how this website works, okay? But this is just exactly what I'm talking about. You need accessibility. So I wouldn't know whether or not why there was such a big jump. Can you see that on the 24th of April? Okay, so I would assume that because this is 8.5 and this is 9, right, which is a mint, that constituted to a jump of more than 100%. Because of the quality. Okay, this is probably the only reason why there was this big jump. And by the way, this is a sold price. It's not like a price where it was just listed. So this is the part where it gets really interesting, because if you look at it, okay, to be fair, okay, let's just look at the fact that there's one in March, okay, which was 1 month, almost close to 1 month ago, which sold for $121,000. Okay, and same thing, it is a mint, right? So this is where things get really interesting for me, because if you want to blockchain all these things, how do you do it? Firstly, you have to have a few parties involved, right? The people who obviously own the particular asset, which in this case is the Black Lotus, right? Then you have to create an exchange, and you have to have a token that represents this particular asset. Now you must be wondering, don't all these buyers and owners, why do they want to even share or even fractionalize this? Simple. Obviously, the ones who want to own it have no intention to really put it out there on the market and give it that much liquidity, because the whole idea is to keep it slightly illiquid. Because the more illiquid a particular investment is, the less likelihood it will drop suddenly or randomly in value, because it's so hard to attain, right? In this case, like I said, you only have 1,100 Black Lotuses in the market. You don't even know, right? You don't even know how many of them have been damaged. You don't know exactly how many are in mint, and of course you and then you have the Black Lotuses that are near mint. Okay, so there are different conditions. Then there are those that are lost. Okay, so theoretically there should be less than 1,100 Black Lotuses in the market at the moment. And probably there are even some that are not even revealed yet. Then there are those that are even signed by the artists. So I find that there's a lot of uniqueness to the collectible card game space. And right now, if I was someone who wanted to buy it, right, I have to go through obviously either this website, or I have to find people who are obviously credible themselves and they've been doing this for a long time. So all these things are how we assess a market and access and assess. Okay, so accessing a market is one thing. Right now, I only know that this website could potentially give me the opportunity to buy the Black Lotus. Now, the next thing I have to do is it credible? Well, if you see, it says, okay, when I look at it, it's just telling me, just at a glance, okay, I'm no expert, but I'm just trying to giving you the thought process here. So right now, obviously, it says it's powered by eBay and everything, but it doesn't tell me whether or not when I buy this, is it going to be credible? Obviously, after researching, I hope to find that, okay, the PWCC members or the people who run this marketplace are credible individuals themselves, and they do have investor education on how to even invest in this particular asset class, okay? So this is where eventually we will move to this kind of space, okay? By the way, I'm just giving you an example. It doesn't have to be collectible cards. It can be in art, islands, it can be property, it doesn't matter. So what's the benefit of this? Right now, if you created a marketplace and they are already trying to create that, if you look at the marketplaces tab, right now it's only auction, which is live. Next time, they're going to do exchange marketplace and vault price. So exchange marketplace is very straightforward. We're already pretty familiar with the fact that right now we are trading crypto on an exchange, right? Where the price and the order books, and if there is enough liquidity and demand for a particular crypto, you're going to see very nice, healthy books of buying and selling with not much price differentiation. So what do I mean by the price differentiation? The bid and offer price are very close to each other. So you're not going to see this very large price disparity. As you can see, what is a very good example? Just look at this. How is it that on the same day, this is 8.5 and the other one is a 9, right? But it's a price differentiation of almost 100%. So if you, what about this? Okay, what about this? 1 month ago, the price jumped 20 over 1,000. Okay, so that's what I mean. There's a huge price differentiation just by 1 month. Like, why? It's to me, when I look at just the description, right? Like I said, I'm no expert, but based on the fact that this is a graded at a 9 min and this is a graded at 9 min, both are the same, right? Alpha Black Lotus. Why is it that it increased 20,000 in just 1 month? So this is the part where price discovery plays a very big hand. Like, okay, for example, on the 27th of February, 166,000 for a 9.5. Like, all these things are all floating in my head. So right now, right, when you talk about illiquid investments, right, it's really based on what is the willingness of the buyer. How willing is the buyer wanting to buy that particular item, okay? And really, that's just it, okay? So eventually, okay, imagine if I'm this particular buyer, right? I wouldn't be too pissed off because this is a 9.5, obviously. It's a better quality. And maybe, like I said, out of those 1,100, there are only so few that meet this mark of 9.5. There are probably even cards that are 10, rated 10. That means they're just perfect. They're in pristine condition. And you're talking about something that's already 26 years in the making, okay? 26 years old already. It's very hard to find because at the time, if you were someone who was playing Magic the Gathering, you would only play. You wouldn't think about how valuable this would become because everything is in hindsight, right? And this is where, right now, if I was someone who was looking at this space, I'll say, okay, look, I definitely cannot afford or would want to buy a 100 over 1,000 Black Lotus because I wouldn't know how to take care of it. Next thing, I would worry on how it would be sent to me and would I be assured that when it's being delivered, it's going to be in good condition because there are all these risks involved. So say, for example, if I want to be, I know for sure, okay, I know for sure that these people are going to take care of it, okay? So right now, these people, PWCC, they are going to hold custody, okay, of this particular asset. Okay, that means you can trust them. Okay, they've been in the market a while. Obviously, they have the reputation. I do not want to have to question that. So what they're going to do is probably kind of categorize or at least put some kind of code to that particular Black Lotus. Okay, so let's just use this as an example. So there's a code for that particular Black Lotus. It is unique. No other person can actually own it. So say for example, right, as a marketplace, they are only here to do business. They are not here to really hold it, okay? Because to them, liquidity is very important. They want to always sell. They are here to broker. So whoever is willing to sell and there's a willing buyer at the end of the day, they make the difference. Now, obviously, there are times when the sellers, right, who usually want to remain anonymous, nobody who owns this particular Black Lotus wants to reveal themselves, right? So they usually find the marketplace again or a reputable broker to start marketing and showing it off. That's how it works. So liquidity is very important. One is that you are doing this on consignment. So what that means is that that particular seller is just placing it there and using your platform, okay, or this particular platform just to show the world that this is up for sale right now. Okay, from there will be a negotiable price between whoever is buying, whoever is interested in buying, and of course between the seller. From there, it's more of this platform is going to create the escrow, and clear enough, here you can see that there is the escrow option where if there is someone who is truly interested in buying, they will probably put a deposit, and from then this PWCC market will facilitate to make sure that the seller will also honor and make sure that that particular item is authentic. Okay, and that is why Beckett is basically like the rating company, okay, which is another company altogether that will put the rating for the items. These are two different companies, by the way. Okay, so Beckett is pretty much known for baseball cards, basketball, football, so on and so forth, and they do grading of a lot of collectible cards. You can put it in the financial terms as they are the S&P, the Fitch, the Moody's, right, where they kind of rate the bonds. Well, you know how that turned out, but in this case, they are the ones that rate the cards. So back to the marketplace. So in the blockchain, there are going to be a few things that are going to happen. One, there's going to be a unique token that will, which is probably the non-fungible. That means it's a non-fungible token. It's a ERC 721, I think, or is it 712? Anyway, it doesn't matter. So that standard, it cannot be duplicated, okay, for that fact. So that is going to be unique and it's going to be attached to that particular Black Lotus. From then, it's going to be on the blockchain. I'm giving an example. It's not happening now. And probably there are already systems that do that, because right now those are centralized systems. I'm talking about open source. They are going to be eventually validators. They are going to put all this onto a proper system. I'm pretty sure of it. It's just a matter of time on what particular asset class is going to be there, or maybe it's already being done at the moment. I wouldn't know. But anyway, back to my theory. So the next thing is the Beckett will obviously want to be involved, right? Because Beckett has to give its stamp of approval to validate this, to say that, okay, this is authentic, and yes, it is validated by us. Okay, so from there, it has an additional layer and a stamp of approval there. And from there, knowing that Beckett has already given the approval, the buyer, okay, let's say I'm the buyer, I don't have to question already that this is authentic. This particular item, and even if I'm buying the token or a fraction of that, I know that it's an authentic Black Lotus, and it is 9.5 based on Beckett. I don't have to care about whether is it real or not, because how I notice right now how these cards are being validated, they will be sent over to someone who is a collector or someone who is a credible broker. The broker will then look at it, okay, and from then they will do some validation or do some marketing and send it to Beckett. Beckett will send it back to them, and they will say, okay, right now this is this is a genuine Black Lotus. This is the grading based on the condition, so on and so forth, whatever, and then this is the rating. So you see, what happens is that there are a few middlemen, and every middleman obviously takes a cut from the particular owner of the card. But the owner may not know the whole process, right? Because maybe that person is someone who owned the card long time ago, and at the time the whole Magic the Gathering economy wasn't as vibrant or people would care about it. Then right now, since it's more valuable, right? The cards are really crazy, guys. You can buy a house with this particular card alone, right? If you own it. So it becomes really serious, okay? And people naturally do this professionally, okay? I'm not kidding. So right now, you have the broker, all right, who will do the validating. And then from then, that broker could potentially also find buyers. It doesn't have to go through PWCC, right? From there, everyone has to question on whether or not this particular broker is credible, because that person can also, take your card, swap your card, and do a lot of shit, right? That's also a potential liability and a security risk. So all these things are definitely going to be playing in your head and should play in your head, especially if you are a buyer. And even if you're a seller, you would ask all these things, because let's say if I was to connect to the buyer directly, and this buyer doesn't really know much, okay, and I don't know his credibility. But then again, I know he owns one of the 1,100 Black Lotuses in the world, okay? If I don't go to him, so there's a few things. Obviously, if it's not rated, I will get it at a discount, because I'm now taking the risk that I could be potentially buying a card that doesn't have its rating or condition determined to me, you see? Because although to me, I'm not someone who is an expert, I only know that is a Black Lotus, but whether is it genuine and what kind of condition is it, I wouldn't know. So I need a validator. So in this case, Beckett is the validator. And how this eventually opens up is maybe on the blockchain, there can be, Magic the Gathering enthusiasts, or these are people who are able to validate that, hey, you know what, this is truly authentic as well, and they all vote, right? Because we all are familiar with voting systems, and we start voting to say that, okay, this is authentic. And when you do voting and truly from a consensus is genuine, they will get a reward from the cut of this sale. So you're actually rewarding the network and not a particular third party. Okay, this could be a system in itself as well. The next thing is, let's say if I am buying the token or a fraction of this Black Lotus. Obviously, I can't own. Maybe I want to own 10,000 worth of 10,000. Maybe I own $10,000 worth of this particular Black Lotus. But in the next sale, okay, when it eventually gets sold, I get a cut of that profit. Okay, say for example, if it's 141,000, the next time it sells for 1 month down the road, if it sells for 160,000, I get to take a cut of that profit as well. Obviously, the exchange must honor the fact that I'm providing the liquidity. Do you see where this is going? Because the exchange, right, may not want to risk so much of its own capital. But obviously, you must be saying, hey man, if it's on consignment, all this shit doesn't matter already. But sometimes you want to own that particular asset class because you don't know whether that person could potentially, right, not be able to take care of it. I mean, after all, it's just a card, right? For all you know, the guy's dog or the kid or the guy's kid could just, reach and take that card and mangle it or whatever. So from whatever condition it used to be, you would probably want to keep safeguard it, right? You want to safeguard it in your vault. You know how to take care of it. You're a professional. So you would rather say, okay, you know what? I will buy that off you because right now I only need to say fork out 50% and I allow 50% of the balance to be paid by my investors who are going to buy a fraction of this particular Black Lotus. You see where I'm coming from? So it provides you, or at least the exchange or whoever wants to buy, less risk. There's a lowered risk in terms of buying that particular Black Lotus and owning it for that time frame. It also opens up the possibility of financing. So for example, let's say I am someone who owns that Black Lotus. It is now in pristine condition, but I want to release equity. So let's say, for example, I really bought this particular Black Lotus already, okay? I bought this Black Lotus, but I want to release some equity to buy some cryptocurrency, for example. So right now, the exchange in question could If they honor, they can say, okay, sure, I will extend a line of credit to you based on the fact that you are pledging this particular asset class in my vault. So it will go to the vault, right? It will go to the vault. And from there, let's say, for example, we clearly know that the value is 100,000, 141,000 based on the last transactional price. So what this exchange PWCC can do is that they can do a haircut. So they'll say, okay, we are now going to value your Black Lotus for 120,000 instead, because I definitely have to take a haircut in terms of the asset, right? Because I need to manage my risk. So I'm going to be able to extend to you only 100,000 in liquid cash. So from there you can release the liquidity from a tangible asset rather than sell it off. That means you still own it. Okay, you still own it. It's still in your name, but you free up liquidity to do more things. You see, so right now this whole ecosystem will start to form. Okay, I know it's a little bit dense, it's a little bit deep, but this is where the space is going. Because when you start to understand how this whole space starts to work and why blockchain is important, and of course this is definitely going to move into that direction. It doesn't have to be in collectible card games. It can be in other asset classes that are a little bit more liquid at the moment, but this is where I see it eventually moving towards, and that's where I think we all should focus our attention on. And the moment that we can validate tangible assets with the digital representation of it, that is where we will start to gain more traction. Now, no one needs to care whether is it blockchain or not. Okay, that's the thing about the blockchain. You don't have to care. It's just about how are you going to participate. If it's an open source system, how does it work? Okay, so anyway, that is the end of the episode. I really wanted to put this out there. I know that I already did a live stream in the morning, but I just wanted to do another one with regards to this because I don't want to forget my thought process. And I think that this is something that's important. And you know what? If someone who is watching this video decides to create that system, it only benefits you or your community, right? Because you're now providing access. Because right now, if I was to buy the Black Lotus, right, it's kind of a pain in the ass if you think about it, right? It is only available in one particular market, and it seems to be the largest. Right now, if you want to buy it, firstly, it's in the US, right? So there'll be shipping, me having to validate it, and I have to trust the parties that I already mentioned. And if I'm not familiar, I tend not to buy it because it's $100,000 investment here we're talking about, right? I'm not gonna just plunk it online. I would definitely want to see it. But eventually people will start to understand this. And this will also take place in many other illiquid investments or asset classes that were previously non-accessible to the masses could potentially be accessible. And even if it's not open to the masses right now, I'm sure there are a lot of AI customers, right, like myself, who would want to start looking at all these things, right? And that was the thing that took really 30 years in the making to really start opening up. And because of blockchain and because of really the whole crypto market erupting, right, it allowed us to start thinking in this way that now these asset classes or these investments could potentially be the new asset. Yeah, and who knows, maybe you will see the Black Lotus being traded on a marketplace in one of the exchanges soon. We will never know. Or maybe a virtual item that was, usually only for people who were playing the game could also be in demand, right? All these things are happening, guys. All these things are happening. You just have to open up your eyes and understand that these could potentially be part of your portfolio as well. All right. So anyway, that's all I have to say. Anyway, take care and have a good weekend, and we'll see you in the next live stream.